Good morning. Good to be with you today. This is Jack Iyer Sr. here on the INS Banker channel. As I want to follow up in some similarity to the first video that we done today regarding what one of my clients was seeking, and finally we got done. So I want to share another step toward that and I'm titling this talk to you on controlling the banking function. It's a game changer for investors, real estate investors particularly, which I'm a part of a community at AIAclub.com, the chairman of that association, and have been associated with for 25, 30 years plus. And so I know where you are as a real estate investor. I know what your needs are, pretty much. I've been there, done that, and so I want to talk to you today about how this can change your life experience if you adopt what I did at the age of 23. I only was tipped to it by understanding and knowing the contracts of a financial industry that basically it just guaranteed me loans that I could access without any credit being established, without any credit buildup, and that I could get in the game, so to speak, at a young age, at 23. And frankly, I've never done anything different than what I began. I thought that I would. I had a lot of mentors around me, and I thought that I would do just like some of them at that age. But so I did this temporarily in my mindset, my thinking, when I began, because I had absolutely nothing to stand on other than a college experience. My job income even was meager, but there was no credit established, no good or bad credit. And so I didn't want to wait. So I did this from the beginning to get access to funds. Also, I had, being freshly married, I needed to take care of those responsibilities too, and this helped me do that additionally. But borrowed money from my first two houses that I purchased, and then I was out of collateral and not able to do any further borrowing. So I sit still for 3 years while I built up my collateral again in the INS banking account. Back then, the name was called the Hampshire Funding Plan. The Hampshire Funding. If there's some of you guys out there that ever remember the Chubb Insurance Company offered that very unique program where everything that you borrowed was deferred payback for 10 years. I didn't have to pay anything back for 10 years in the account, but I had to continue to invest and build my collateral that whole time, which I did. And I accumulated, I made the decision to accumulate the proceeds of the real estate into my banking plan so that my collateral got bigger, then I could do bigger and more of the financing that was necessary in real estate. Knew I wanted to be a real estate investor when I began studying real estate. I knew that was going to be my primary involvement into real estate, not as a real estate agent necessarily, though that is fine. I encourage you to get those licenses, but that was not a goal to be an agent at all, even at that young age. I knew I wanted to be an investor where the bigger opportunities were out there, and that my vocation would be working in the insurance industry. But just on this topic here, controlling the banking functions and how it can change your investors' lives, It's you just consistently run into uh, stoppages or hindrances or delays or adverse interest when you're dealing in the regular street banks and the banking channel there. You sometimes even into hard money lending, which are 15-20% rates, carves a big piece out and sometimes makes it not even a profitable situation for you. So I'm talking about getting loans at 4 and 5% rates that are there for you in the banking area of what you're going to need to buy and invest in real estate. Uh, the So I want you to think in terms of having your own entity for that very critical part. I mean, it's almost like 50%. I know many of you out there, 50% of succeeding or not succeeding in real estate investing is getting money. I mean, as the chairman of AIA Club, I have people come to me all the time about that. How can I get money? Where can I go to invest? Or where can I go to borrow money to buy real estate? Even Jack, can you make me loans? I get that almost weekly. Will you lend money to me so I can buy these properties? And it's just a never-ending situation if you're in real estate investing or even in business. A lot of times, contractors and stuff want to do bigger jobs. They want to do more profitable jobs, they think, and they don't have the collateral or the capital to get the loan from the bank. Now, I did that for almost 30 years of my career was spent working strictly with business owners, that small business, medium-sized business, where you get, 3 or 4 owners on down to the single owner. Typically is who I work with for those years. And much like real estate investors, they were desperate for good lending, and the banks you'd almost think they were controlling the company and the company's growth by what they did or did not do. And so my role and job was to convince that owner there is a way to set aside that money that you need to be able to expand your company, grow your company, and even add to your company and do what you want to do. But you have to do it yourself and not depend on regular banking institutions. So we often, we did that and did some pretty large cases. Never done a case like the one we just recently done. So I told you about the JM case. It's 5 times the size that I've ever done in my career, and I've done some big cases over the years in this area. So I want all of you real estate investors. That's one of my things today that I do, is to think how I can give back to particularly you real estate investors, because I didn't share much of it at all. Tried to a time or two, but I didn't. I don't guess I was good enough to break it down to the real estate investor, and also I had a little bit of a competitive angle to it. I knew I was doing something the others weren't doing, and it was probably stroking my ego at a young age to think that I could do things that the older guys and stuff couldn't do in this area. So, but for whatever reason, I did not share it with real estate investors much at all, just a little. And today I want to change that. I want to give it back, and I'm sharing everything, whatever I've been able to do. I've been able to do and have done a lot of it. and so I want to give back to you so you can be successful, and maybe choose the same path that I did, and that was to make it happen for myself and have those functions of banking controlled by me and not by a third party or others. I didn't want to be begging, for loans and this kind of thing. And so let me think if there's another point here I want to make to you is that you must basically build it. And what I build your own, and what I did was I took out a Hampshire funding plan, included a high cash building insurance plan that was built by myself, and as I let the real estate do it after the first two that I bought, all of the proceeds of the real estate were reallocated back into this banking function, because I knew that if I didn't do that, then I wouldn't have the collateral that I needed to buy the whole property or properties, and from the insurance company, which was a separate lending arm and line of credit that I had with the insurance company. The bigger my collateral got, the bigger my line of credit went, because I had 100% of what my collateral was. I had 100% in a line of credit that I could borrow to buy this real estate with. And so my primary job in vocation during the week, I earned the money from my personal family and personal expenses that we needed. But all the investment money began to go back into this banking system and to build it. And so you might say it was a forced savings. It forced me to save money to do and accomplish this task of being a real estate investor that had ability early on. I bought 18 properties. The second wave, I bought 2. And then 4 or 5 years later, I began to buy again after I built my account back up. I built it with even income tax savings. I remember getting a check for about $4,600 on my first refund from those 2 properties I bought, and I put that money into my banking system because it was a direct result of the tax deductions that real estate gave me and depreciation. And so I had a W-2 job income, so I got back that $4,600 went right into my plan. All the rents went into my plan, and so then I started buying again and began to buy a lot of small equities subject to the existing financing that was in place, is what I bought so many properties with. And I bought 18 that next wave in about 15 months. And I bought 5 in one package, I remember. And so the money that was necessary on my part to come out with, I borrowed the money from this same banking system that I'm telling you about. And then I had 20 properties paying, and I was 27, 28 years old. And again, one of those mentors, having some conversation with him, and he was asking me questions about what I was doing. And this guy was a tycoon and went on to be, a great real estate investor himself and his partner. There's 2 of them, 2 firemen, and so they left that industry and went full time into real estate. But anyway, I was chatting with him about and explained to him what I was doing. He said, I had never heard of anything like that. That's I don't know what the heck that is, but he said, I don't know how you're paying for 18 properties and 17 of them are vacant without income. And I said, it's because of my lending and my banking, Rudy, and they don't require me to pay on each property as you do. and I pay out of my whole rents. And I had three that were paying rents at the time. And so I said, but he suggested, he said, I would not buy any more until I fixed those 17 and got those rentable, and you're collecting rents off of them. And I said, that makes a lot of sense, Rudy. You're older than I am. I think that's probably what I'll do. And I did that. I turned and focused on it. It took me 3 years to put all those properties on the rent rolls, and then things obviously with 20 properties, 19 to 20 properties, cash flowing and bringing rents in. I was paying houses down and paying them off in some cases, and at the young age of 30, I was really turning the corner then, and became an accredited investor at that point, and at 33, and then it's been largely just continued to build on the banking function of the real estate investing. And so I'll be glad to share that with you, and more personally, if you'll drop us a note or ask for a one-on-one meeting. I'll help you, whether you're beginning or whether you're in the middle or whether you're in the end of it. You can do what I did today. It's actually better today in some ways than it was back when I first began, and I continue to add to it and build it, and still do some of the same things today. And some of my biggest cash building assets are contained in these plans that we've done, and so we now began to focus on you guys, you real estate investors that want to get your financial house in order through real estate, or through, and it can be any facet of it. It can be Airbnb, it can be group housing, it can be individual housing, it can be apartments, it can be a business. Remember, I spent nearly 30 years doing business planning, and but any of those things, particularly you real estate guys, I feel a real calling to be significant in your lives and the success. Seen many of you have failed over the years that came through our RIA, and some of you have made it. I think this is a way, if you'll buy into it, it can assure you of success, and you just do what I did, and you certainly should do as good or better, because I had no other attributes as far as a background and so forth that would have said that this should have came my way, but it did. And so I know you can succeed too if you'll listen and act and do, and we'll help guide you do that. My son and I are here to help you. In fact, if you go on our site there, you'll find some very good reading on education that I put together for you on probate real estate, on creative financing, how to get owners to work with you on financing. You're able to even share where you are in these banking plans with them, to assure them that you have the funding to do what you promised to do. So that's helped a few times over the years in proving the financial ability to do what you have proposed to do with them, and bring certainty to them. When they see certainty, they're coming around your way on